Good morning, everyone, and welcome to the PivotBoss pre-market video for Thursday, May 6th, 2021. I am Frank Ochoa, aka PivotBoss. Here's the daily time frame MDES. You'll notice here again, this market continues to be mostly range bound within this range that has developed over the last 15, 20 plus days. I do have a 15-day reading here, and you can see how significant the drop is in volatility and price range over the last several weeks. Price right now compressing tremendously, and at the moment we're seeing again the FOMC key level from last Wednesday, the 28th of April, is held, went offered earlier this week, and then held as resistance yesterday. Today currently serving as resistance. Two back-to-back days trading in the upper half of Tuesday's range there, and again showing bears defending the previous month's close right there. That right there is very important. 4180 continues to be very important. Yesterday we mentioned 4153 was going to be important, and coincidentally 4180 was the exact high of the day, 4153 the exact low, and now we're seeing price action at that edge yet again. Again, below 4153 or 4150 starts to open up some selling pressure here where this thing starts to really drop. Same thing can be said on the opposite side. If we can see a big breakthrough 4180, it opens up some upside ahead. So right now we're kind of in that zone here. Bullish PIMA trigger zone, uptrending market overall, but seeing some signs of weakness here and an inability to get going to the upside. Again, above 4180 opens up quite a bit of upside. Failure to hold 4150, we may be rotating back down to the current month's midpoint, or the previous month's midpoint rather, 4087.75. And below that would tend to rotate this thing all the way back to the beginning of April's move. Alright, let's take a look here at the NQ. Now the NQ has seen a bit more weakness here than the ES. That's been normal here with tech being sold off a little bit more at times. Failed high here, almost one there, and a big breakdown right here through that 700 level. 13,700 was the lows there, you can see right there, and it broke right through that zone. Yesterday a pullback held 35 points shy of 13.7. I mentioned that bulls need to reclaim 13.7, otherwise bears would keep it offered. Yesterday price got within 35 points of that level and then dropped back to new lows on the day. Today you see a midpoint retest and a very narrow range heading into the RTH Open, 57% of ADR. Does that open up more downside ahead? And so given the fact that we've already seen some rounding here, we've seen a break, we've seen a retest, the only thing left to see here is further downside expansion. So we're looking for a move today that could take us perhaps somewhere between 267.5 and 313 upon a downside break. If this thing were to really open it up to the downside at some point over the next 1 to 3 days, we may be looking at a return all the way back to the beginning of April's move. That takes us into about 13,090. So 13.7, the big time level to watch for an upside recovery. Failure to get above that level right now suggests more near-term downside price discovery toward that 13,090 target. So again, today, if we break down, we may see something between 267 and 313.75. Let's take a look here at crude oil. You'll see here with crude, this one had been trending up very nicely. It reached 66.76 here in the previous session, but then got hit hard. It got hit with some selling pressure yesterday, pretty significant top up there. A market structure breakdown, so price hit a high here, again 66.76, dropped, and then started to break through market structure below 66s. So now 66 is a key level here. You're looking at a 60-minute time frame. You're looking at kind of a head and shoulder type of pattern that's developing right now in the 60-minute. So if there's a failure to hold 65s, that could rotate this thing down back toward 64, easy. Maybe as low as 63, the bottom of the recent pivot. But given the overall trend here of this move right now, bulls still continue to be in control. I would say any failure to push below 65 may actually open up more upside ahead. Today's rejection at yesterday's low could be an indication that this thing may be headed again higher toward 67.68. So the fact that we have rejected the bottom of the key range back here, over here, we've pushed through the midpoint. The only level left to test here is the top of that key range, 67.98. So this next pullback may offer an opportunity to go reach that target at 67.98. Let's take a look now at gold futures. Gold again continuing to hold the previous month's close price right on the button. It's been the low the last 2 days, almost the low 3 days ago, and right now seeing a continuation to the upside. 1800 remains very, very important. Clear resistance at that zone, but the uptrend remains intact. Higher lows remain intact. The market structure, price continues to hold above 1750, 1760. So soon we may see expansion through 1800. Right now we're inside this narrow 15-day range. You can see it quantified down here, 59% of average. So at some point when we see expansion, we could be looking at a pretty solid move here. This range right now quantifying at least 88 points of action. Maybe we see at least 100. So if we can break out of 1800, it opens up 1875, maybe a little bit higher, where we could be looking at, you know, the move across that range into these upper targets that we've been talking about. So again, narrow compression here in gold with an upward bias above 1800 starts to open up some upside. All right, that is it for now. We'll see how this plays out heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.